Hello, and welcome to Boni's Life, the channel where we dissect the complexities of the financial world and empower you to navigate the markets with confidence. Today, we're diving headfirst into a topic that's set to redefine trading as we know it: artificial intelligence versus the market. For decades, traders have relied on a combination of technical analysis, fundamental research, and gut instinct. But what if I told you there's a new player in the game? A player that can process billions of data points in a fraction of a second, identify patterns invisible to the human eye, and make predictions with a level of accuracy that was once the stuff of science fiction. That player is AI. And today, we're going to put it to the ultimate test against the most volatile, unpredictable, and exciting market on the planet: cryptocurrency. In this episode, we're putting AI to the ultimate test. We'll explore how AI models are predicting the future of Bitcoin, Ethereum, and the hottest altcoins. We'll compare these AI-driven forecasts to the tried and true methods of technical analysis, on-chain data, and the fundamental state of the market. We'll also break down the global events that are sending shockwaves through the crypto space and what they mean for your trades. And most importantly, we'll equip you with actionable strategies to trade this market successfully, whether you're a seasoned pro or just starting your journey. So, buckle up, because we're about to separate the hype from the reality and find out if AI is truly the key to unlocking the future of trading. This is AI versus the market, and it starts right now. So, how exactly is AI being used to predict the notoriously volatile crypto markets? It's not about a crystal ball, it's about data. AI models, particularly those based on machine learning and deep learning, are designed to consume and analyze vast data sets at an incredible scale. We're talking about everything from historical price action and trading volume to social media sentiment, news headlines, and even the code being committed to a project's GitHub repository. The beauty of AI is that it never sleeps. While you and I are catching some rest, AI algorithms are scanning thousands of data points, looking for correlations and patterns that would take a human analyst weeks to uncover. This is the fundamental advantage that AI brings to the table: the ability to process information at a scale and speed that is simply impossible for humans. There are several types of AI models being deployed in the crypto space. Some of the most common include long short-term memory networks, or LSTMs, which are particularly good at recognizing patterns in time series data like price charts. These networks have a form of memory that allows them to learn from sequences of data, making them ideal for predicting future price movements based on historical trends. Then you have models like ARIMA, which stands for Autoregressive Integrated Moving Average. These are statistical models that can be used to forecast future values based on past values. ARIMA models are particularly useful for identifying trends and seasonality in data, which can be valuable for understanding the cyclical nature of crypto markets. And more advanced techniques like random forest and XGBoost are also being used to build predictive models that can handle a wide range of variables. These ensemble methods combine multiple decision trees to create a more robust and accurate prediction. They're particularly good at handling noisy data and avoiding overfitting, which is a common problem in financial modeling. Now, you might be wondering, how accurate are these AI predictions? Well, studies have shown that top AI trading platforms can achieve a directional accuracy of around 55 to 65%. While that might not sound like a magic bullet, in the world of trading, an edge of just a few percentage points can be the difference between profit and loss. It's about consistently being on the right side of the trade more often than not. To put this in perspective, if you can achieve a 60% win rate with a favorable risk-reward ratio, you can be a very profitable trader over the long term. The key is consistency and discipline, and AI can help you achieve both by removing the emotional biases that often lead to poor trading decisions. But the real power of AI comes from its ability to create hybrid models. These models don't just look at one type of data. They combine technical indicators, on-chain metrics, and sentiment analysis to create a more holistic and robust prediction. For example, a hybrid model might identify a bullish chart pattern, confirm it with an increase in on-chain whale activity, and then use sentiment analysis to gauge the market's reaction to a recent news event. This multifaceted approach is what gives AI its edge. Recent research has shown that hybrid models combining wavelet transform, XLSTM networks, and squeeze and excitation networks achieve the highest prediction accuracy and robustness in cryptocurrency price forecasting. This is the cutting edge of AI in trading, and it's only going to get more sophisticated from here. Now that we understand how AI is being used, let's take a look at the current state of the market. As of January 14th, 2026, the global crypto market cap stands at a staggering $3.34 trillion with a 24-hour trading volume of over $173 billion. Bitcoin dominance is holding strong at 57.2%, while Ethereum's dominance is at 12%. The Fear and Greed Index is currently at 47, which indicates a neutral market sentiment. And these numbers tell us that we're in a healthy market environment with strong liquidity and a balanced sentiment. This is the kind of market where both bulls and bears can find opportunities, and where careful analysis can really pay off. Bitcoin is currently trading at around $95,564, up 3.4% in the last 24 hours. From a technical perspective, we're seeing some very interesting developments. BTC has broken above the 50-day exponential moving average, which is a strong bullish signal. It's also forming an ascending triangle pattern, which often precedes a significant breakout. The key resistance level to watch is the psychological $100,000 mark. If we can break through that, we could see a major leg up. On the downside, we have support at $90,000, which would be a good place for a stop loss for any long positions. The daily RSI is currently at 66, which is above the neutral 50 level and still rising, indicating that buying momentum is building. The derivatives market is also showing bullish signs. Bitcoin's open interest has increased by 6.23% in the last 24 hours to $64.69 billion. And the funding rate is at a healthy 0.0093%, which indicates a slight bullish bias without being overheated. Ethereum is also showing strength, trading at $3,316, up over 5% in the last 24 hours. The ETH to BTC ratio is also starting to look interesting, suggesting that Ethereum could be poised to outperform Bitcoin in the near future. According to analysis from Decrypt, capital rotation and improving on-chain activity could help Ethereum narrow its performance gap with Bitcoin in 2026. Ethereum's open interest stands at $41.09 billion, with a 24-hour volume of $86.51 billion. The funding rate is at 0.0093%, similar to Bitcoin, indicating a balanced market. But technical analysis only tells part of the story. To get a complete picture, we need to look at the on-chain data. And what we're seeing right now is a fascinating divergence between the big players, the so-called whales, and retail investors. According to data from Sentiment, while smaller wallets have been taking profits, addresses holding between 10 and 10,000 Bitcoin have been in a period of heavy accumulation, adding over 56,227 Bitcoin to their holdings since mid-December. This is a classic sign of smart money positioning for a move higher. Sentiment has classified this pattern as one of the most bullish configurations in its framework. Additionally, Arkham Intelligence reported that 3 wallets accumulated 3,000 BTC in the first week of 2026, and the legendary Bitfinex whale has been buying up to 300 BTC per day in a powerful accumulation spree. We're also seeing a significant amount of Bitcoin moving off exchanges and into cold storage. The Bitcoin exchange balance currently stands at 2.48 million Bitcoin, with a 24-hour outflow of 7,040 Bitcoin. This is another bullish indicator, as it suggests that investors are planning to hold their assets for the long term, rather than keeping them on exchanges to sell. And let's not forget about the Bitcoin ETFs, which have seen a massive surge in inflows in recent days. On January 14th alone, US spot Bitcoin ETFs pulled in $753.7 million, the strongest day since October. Fidelity's FBTC led the inflows with $351 million. Since their launch, Bitcoin ETFs have accumulated a total of 600,520 BTC, representing a significant institutional endorsement of the asset class. Now, no market exists in a vacuum, and the crypto market is no exception. It's deeply intertwined with the global macroeconomic landscape, and right now there are several key events that are creating both headwinds and tailwinds for crypto. First up, we have the Federal Reserve. There's a lot of debate right now about whether the Fed will cut interest rates in 2026. The current federal funds rate stands at 3.5 to 3.75%. JP Morgan is predicting no cuts in 2026 and even sees a potential rate hike in 2027, while Forbes is suggesting that rates could edge lower. If the Fed does decide to cut rates, it would be a major tailwind for crypto, as lower interest rates tend to make risk assets like Bitcoin more attractive. On the other hand, if the Fed holds rates steady or even raises them, it could put a damper on the crypto market. The good news is that the core consumer price index dropped in December, which could give the Fed more room to ease monetary policy. There's also the ongoing tension between the Fed and the Trump administration. Fed Chair Jerome Powell has vowed to fight attacks on Fed independence, and this conflict introduces uncertainty into the Fed's 2026 rate projections, potentially disrupting global liquidity and risk sentiment. Then we have the ongoing saga of the Trump tariffs. On January 12th, President Trump declared that the U.S. would impose a 25% tariff on any country conducting business with Iran. The Supreme Court is set to rule on the legality of these tariffs, and the outcome could have a significant impact on the market. A ruling against the tariffs could lead to a short-term burst of volatility, but would likely be bullish in the long run, as it would remove a major source of uncertainty. There's also the potential for over $133 billion in refunds, which could inject a significant amount of liquidity into the market. Historically, every Trump tariff announcement has caused crypto volatility, with October 2024 seeing $19 billion in liquidations from tariff news. But it's not all about the macro headwinds. There are also some powerful tailwinds that are driving the market forward. The progress of the Clarity Act in the Senate is a major step towards regulatory clarity in the US, which is something the industry has been crying out for. This bill, which moves to the markup stage on Thursday, will separate the roles between the SEC and the CFTC, with the latter being given more duties, which is seen as a good thing for the industry. And as we've already discussed, the continued inflows into the Bitcoin ETFs are a clear sign that institutional adoption is accelerating. Vanguard has even authorized the purchase of Bitcoin products, marking a significant shift in the traditional finance world's attitude towards crypto. So, we've looked at the AI predictions, the technical analysis, the on-chain data, and the global macro landscape. Now it's time for the big question: who wins in the battle of AI versus the market? The truth is, it's not about one versus the other. The most successful traders of the future will be those who can effectively combine the power of AI with the insights of traditional analysis. AI is not a replacement for human intuition and experience. It's a tool, a very powerful tool, but a tool nonetheless. Forbes predicts that Bitcoin will remain volatile in 2026, with a potential low of $80,000 and a high-end range of $150,000 to $175,000. AI models are generally aligned with this outlook, predicting continued bullish momentum with significant volatility along the way. Think of it this way: AI can be your tireless research assistant, scanning the markets 24/7 for potential opportunities. It can help you identify high-probability trade setups, manage your risk, and even automate your execution. But it's still up to you, the trader, to make the final decision. It's up to you to understand the context, to weigh the risks and rewards, and to pull the trigger. The key is to use AI as one input among many. Combine it with your own technical analysis, your understanding of on-chain data, and your awareness of the global macro environment. That's where the real edge lies. So, how can you use this information to trade the market successfully? Let's break it down for different types of traders. For the long-term investor, the strategy is simple: dollar cost average into high-quality assets like Bitcoin and Ethereum. The on-chain data is telling us that we're in a period of accumulation and the long-term fundamentals have never been stronger. Don't get shaken out by short-term volatility. Keep your eyes on the prize. The whale accumulation we're seeing is a strong signal that smart money believes in higher prices ahead. When the big players are buying, it's usually a good time to be accumulating alongside them. Consider setting up a regular buying schedule and sticking to it regardless of short-term price movements. For the swing trader, the current market offers some fantastic opportunities. The ascending triangle pattern in Bitcoin is a classic swing trading setup. A break above the resistance at $96,500 could be a great entry point for a long position, with a target of $100,000 and a stop loss at $90,000. That gives you a risk-reward ratio of about 1 to 1.5, which is acceptable for a high-probability setup. Keep an eye on the Clarity Act vote and the Supreme Court tariff ruling, as these events could be catalysts for significant price movements. Use AI tools to monitor sentiment and on-chain flows in real time to confirm your entries and exits. For the day trader, the key is to be nimble and to react quickly to changing market conditions. Use AI-powered tools to identify short-term trends and to scalp small profits. Keep a close eye on the order book and the funding rates to get a sense of the short-term sentiment. The current funding rate of around 0.01% is neutral, which means there's no extreme positioning in either direction. This is a good environment for day trading, as it suggests that the market is not overheated and there's room for movement in both directions. And always be prepared to cut your losses quickly if a trade goes against you. Here are some specific trade setups to consider for the next 24 hours. For Bitcoin, a bullish setup would be to buy on a break above $96,500 with a target of $100,000 and a stop loss at $93,000. For Ethereum, a bullish setup would be to buy on a break above $3,400 with a target of $3,600 and a stop loss at $3,200. For Solana, which has been showing strong momentum, a bullish setup would be to buy on a pullback to $140 with a target of $160 and a stop loss at $135. The world of trading is evolving at a breathtaking pace. The rise of AI is not something to be feared, it's something to be embraced. By combining the power of artificial intelligence with the timeless principles of sound trading, we can unlock a new level of performance and profitability. The data we've analyzed today paints a picture of a market that is bullish but cautious. Whales are accumulating, institutions are buying through ETFs, and the technical setup is constructive. But there are also significant macro risks on the horizon, from Fed policy uncertainty to geopolitical tensions. The key takeaway is this: use every tool at your disposal. AI is a powerful ally, but it's not infallible. Combine it with your own analysis, your own judgment, and your own risk management. That's the formula for success in the modern market. So do your own research, develop your own strategy, and never stop learning. The future of trading is here, and it's powered by AI. Thanks for joining me on Boni's Life. Be sure to like, subscribe, and hit that notification bell so you don't miss our next episode. Until then, trade smart, and I'll see you in the next one.